We have a really great panel set up today with some of the best and most respected fintech gurus, not only in Kenya, but I would say across the continent. So we're really looking forward to having a very interactive discussion, very much a conversation between the panelists. We are going to have a Q&A session after the discussion. So if you do have any burning questions, please make sure you write them down so you don't forget for that part of the session. So just to remind everybody what the theme is for what we're going to be discussing this morning is building the future growth of the Africa Fintech ecosystem. So before we get started, please also make sure that your phones are on silent so that we also have a very seamless panel session this morning. Thank you so much. To get ourselves started, I'm going to ask our panelists to introduce themselves. I know a lot of people are very familiar with these faces as well, but as we heard this morning, we have people from across the globe with us today. So if you could please just state your name, a little bit about your current role and the organization that you work for. Thank you. Esther, do you want to start us off?
Yeah. And so good morning, everyone. It's a pleasure to be here. The last time was at the expo, we had our Decode conference where we invited quite a number of fintechs to join. So it's a pleasure to be here today. So I run financial services at Safaricom, which is powered by M-Pesa. And I'm a career banker. I've been in banking for a long time. So it's nice to see colleagues from the banking space also here. Really, my role just involves innovating, working with strategic partners to see what we can do to transform the lives and make things easier from a financial services perspective. So happy to be here.
Thank you, Esther.
Good morning, everyone. My name is Ali Hussein Kassim. First, before I introduce myself, I just want to say it's good to see a panel that has more women than men.
Yeah.
So shall we call it a funnel instead of a manel? Anyway, my role here today, I'm wearing my hat as the chair of the Association of Fintechs in Kenya, and also board member and executive vice president for Eastern Africa for the Africa Fintech Network, which is a Pan-African fintech umbrella group of 40 plus national fintech associations. I really love to talk about policy and regulatory issues in Africa when it comes to fintech, because too often entrepreneurs don't focus enough on the policy side of their businesses. And I focus more on policy because before regulation, there has to be policy first. And to just say that this is crucial for any entrepreneur here to understand and appreciate that if you are not at the table having dinner, discussing critical issues, you're probably on the menu being eaten. So you don't want to be there. You want to be at the table. Thank you.
Thanks, Ali.
Good morning, everyone. My name is AK Urum. I'm the founder of a company called RiseVest, and what we essentially do is to increase the access that Africans have to global investments across multiple jurisdictions, multiple asset classes. We're also the company that acquired last year a Kenyan startup, HISA, that is democratizing access to stocks in the US and Kenya. And our entire mission is to change the way young people invest across Africa, to make it easier for wealth creation to happen, and also to provide more opportunities for people to be able to participate in the global economy right here from Africa. And I did take notes of the point that Ali just made here, because I feel like I'm one of those people. I'm a builder, and most of the time we're focused on building, we're focused on thinking about what's in front of us, the problems that we're tackling. and probably not as much as we should on policy and government relations and regulations, except on the reactive end. So part of the reason I'm here today is also to start those conversations and meet more people so that we can start to think about how do we grow from just building our products and our companies within our jurisdictions to thinking about the entire continent and how we can create the framework for further growth. So excited to be here. Thank you very much.
Thanks, Ake.
Morning, everyone. My name is Sandra Yao. I've been in Kenya for 20 years, in case of any doubt. So this is home for me. Ali always have to remind me, you're a Kenyan now. So I'm a Kenyan. Very happy to be here. Glad to see everyone. Take your time out of your busy schedule. I lead the cross-border remittance payments and building a banking-as-a-service platform for Ecobank Group. 8 months into the bank, I am not a banker. I'm still payments, will remain that way. Very excited to discuss the Ecobank's role in building and driving growth in this very dynamic and rapidly evolving ecosystem for fintech. We are the largest bank in Africa, present in 35 markets. We have been in the backbone supporting the economics growth for this continent and will continue to do so as we celebrate our 40th birthday this year. Thank you.
Thanks, Sandra.
Morning, everyone.
Morning.
Apologies for joining you so late. Well, since we're still introductions, I think I'm on time.
Perfect timing.
Happy timing. Angela Mwirigi, KCB Bank, Director Digital Financial Services, 127 years old. I felt I had to add that after she said we're the largest bank in Africa. Okay, we're the oldest then. Okay, but in Eastern Africa, yes, we're very proud of our efforts. We think we have done a brilliant job with expanding digital services, especially digital lending in our part of the world. We're in 7 countries. I'm assuming most of you are well aware of the bank. So, yeah, I'm happy to be participating in this and looking forward to sharing some interesting insights. Thank you.
Thanks, Angela. And thank you to everybody for a very insightful intro. As you can tell, guys, this is literally a powerhouse of panelists. Whether you are a founder wanting to start your own business, whether you're an operator or in the banking sector, policy as well as regulation, we'll be able to answer some of the most burning questions that you might have about the state of the Africa Fintech ecosystem and what that might look like in the future. So I think to kick things off, this is a very special year for you, Esther. 18 years of M-Pesa. Guys, can you please give a round of applause to M-Pesa? 18 years of impact and innovation, which is really incredible. And also just hearing about your intro and how initially, you've essentially worked for every banking powerhouse as well. And now you're, with Safaricom as well. So from your perspective, what would you describe as the biggest shift in the fintech landscape that you've seen over the last decade?
So thank you so much. M-Pesa is now an adult, right? So very, very exciting. So I'd like to talk about the biggest shift that we've seen over the past 18 years or the last decade. When M-Pesa started, it was really around how do we simply move money. It was also around financial inclusion. When we first started, financial inclusion was sitting at about 23%. Today, we're north of 84% being included. But what are the big things that have shifted? So we're moving away from counting how many people have accounts. We're now in that space where we're saying, what is the impact? How are we integrated into people's everyday lives? So that is a big shift. And how are we leveraging technology? Because 10 years ago, when the mobile money movement started, it wasn't about technology. It was actually literally about how do I just make things simple, convenient, and accessible for our customers. We've achieved that now, and that's what the essence was. And so now we're moving to the space of how do we make it simpler? How do we make sure that your lifestyle is enabled through the different solutions that we have? Today, you don't only use mobile money to simply move money to, person to person. We're seeing a massive shift also in the business space. where we're seeing SMEs adopting mobile money. We're seeing businesses transacting on the same platform. We're seeing the advent of AI. How many of you are using AI today? Yeah, so everyone in the room is using AI. So it means that we're moving to a space where we're starting to hyper personalize your experiences with money. And that's where now the real use of technology starts to come. But that only came once we were able to solve a basic need around the movement of money. So, what the future looks like, what we're going to be talking about now moving forward, is how then we make it relevant to each and every one of you, but not as a community, but you as an individual with your own unique requirements, your own unique needs. We will make sure that we're customizing that for you. To take it into the space of how we're customizing, so we're doing that also at an individual level, but then think about what's also happening at a sector level. So the presentation just before, which is NACS, they talked about what they're doing, say for fuel companies, for retailers. I want to talk about a basic thing for Africans, which is around agriculture. So today we've been able to deliver over 10 billion shillings worth of agricultural subsidy for fertilizer to farmers. That means over 1 million farmers today have been able to access key inputs that are required to grow crop, which we then consume. Now, who would have thought that was going to be powered by a mobile money platform in order to achieve that? But we're doing that in order to ensure that there's food security. So that's how it's being integrated. So then there are very specific solutions that are created for the agricultural sector. If we take this and look at another sector, and we look at the retail sector, we've seen a lot of the retailers today integrating with mobile money. We did a quick survey across the large retailers, and we found that over 60% of their sales actually are transacted on mobile money, right? So in your everyday use, in your everyday transactions, it's now been integrated. Then you think about then how do these retailers then work with the manufacturers that stock up these specific stores? Again, that has largely been enabled by what technology has been able to do and the B2B connectivity happening amongst the different partners. So that's the next phase. That's what the next decade looks like. That's the biggest shift that I have seen. We're moving away from purely inclusion. We're then moving into a space of integration, because now no longer are we just working individually. We have to integrate in order to give individuals and businesses the solutions that they're looking for. And that then creates a bigger impact. We've now moved from talking about movement of money. We're now talking about food security. We're then now talking about healthcare. How is that then enabled? So we're going into the next, which is just making sure that we're completely integrated and working with each and every one of you here who are our partners to make that happen. So that's the future that I see.
Wow, it doesn't get more impactful than that. I think the other thing, just building on that, Esther, when you're talking about food security and, focusing on the retail sector, the other things that are really key and underlying there is who are the primary supporters within the agricultural sector? It's women. So you have that added layer of impact when you're looking at the new shift of focus. And in terms of retailers as well, I'm very guilty, I guess, of my shopping habit in terms of using M-Pesa to buy thrift clothing via Instagram. And again, it's a lot of young people who are driving these new retail shops that we're seeing, who are digitizing a lot of things, using social media as well, and having to be able to receive payments as a result of that shift. So you've got a lot of young women, a lot of young people generally being impacted by this. So that's really exciting. I actually want to shift now to Ali, because we're not able to have these impacts if we don't have regulations in place to support the solutions that Safaricom, and other actors are building. So in that respect, Ali, as chairperson of the Association of Fintechs in Kenya, how can policymakers actually strike the right balance between enabling innovation and also protecting customers, especially in a market as fast-paced as fintech? I think we've also seen in Kenya recently, there's the provision of the virtual assets bill, which is a good example of, a country and a market trying to keep up with those changes. But of course, there are certain risks that people are potentially worried about. So maybe you can speak a little bit to that.
Sure. So first, two words for me are crucial to start with: collaboration and communication. Or should I start with communication first and then collaboration? Too often, and I'm not specifically talking about any country, I'm talking about Pan-Africa wide. Now, I'm now wearing my hat as a leader of the Africa Fintech network. We see too often that policymakers and regulators forget who they are serving. And it's difficult to communicate with them. It's, these are the regulations, you deal with it. So we are starting to see a seismic change in how policymakers and regulators are working with the industry. 5 years ago and today, very different mindset. And we as the ecosystem, we continue to encourage policymakers and literally ask for a seat at the table to be able to have these discussions. So these two key issues are crucial: communication and collaboration. That's one. The other one is about enabling regulatory frameworks across Africa. I always like to remind my colleagues outside Africa that Africa is not a country. And in fact, even us as Africans sometimes forget that Africa is not a country. We are 54 countries or 55, depending on whether you want to get on the bad books of Morocco and stuff like that. Anyway, I'm known to be an equal opportunity offender, so
A little bit of
happy to say the tough conversations, rather to have the tough conversations. So open communication, collaboration, open and enabling frameworks. So let me step back a bit first and address my fintech colleagues and entrepreneurs. Fintech is made up of two key components: fin and tech. Too often, we forget the fin and focus on the tech. What then happens? We get into trouble with policymakers and regulators. There's a reason why it's fintech. And there's a reason why fin comes first before tech. So we need to take that in cognizant. And the fin mostly speaks to financial, and it speaks to trust. It speaks to the fact that you are handling people's money. And because of that, we have to be super careful. And it's not an Africa issue or a Kenya issue or a Ghana issue or a Nigeria issue. It's a global issue. Financial services is one of the most regulated industries anywhere in the world. So for any fintech entrepreneur or executive here, you must repeat after me at the back of your mind. That issue is not going to go away. To policymakers and regulators, sometimes we shake our heads and wonder, why do we have the African Union? Is it just a talking shop? Is it just talking heads? Why is it that we cannot move beyond political statements and political elections? Sorry, guys. And deal with the issues that affect the African people. So we have the African Free Trade Zone. Out of that, we have PAPS, the Pan-African Payment Settlement System. We have 54 countries. How many countries have signed on to PAPS? Any idea? How many countries have signed on to PAPS?
Unfortunately, I don't think it's
Sorry?
Unfortunately, I don't think it's the 54/55 that we need for.
It's less than 50%. It's less than 50%. So what are we talking about? Yeah. So these issues have to be dealt with. Now, hats off to Rwanda and Ghana, the first countries in Africa to sign a fintech passporting regime, which simply means if you are a fintech in Ghana, the onerous process of starting from scratch to operate in Rwanda are gone. They tick boxes, they agree, they have conversations with the two regulators, and you kick off. I'm proud to say that the Africa Fintech Network at the background has worked with these policymakers to ensure that some of these things happen. We hope, our hope and prayer is that most other countries will step in. Now, here's the other thing. This is the interesting. You have 4 key financial services or fintech markets in Africa: Kenya, Nigeria, South Africa, Egypt. Those are the 4 key major players that usually have 80+% of the fintech market in Africa. These 4 are nowhere in the finteching license. What's going on with us? Right? So the guys who don't even appear in that ecosystem are leading, which is good. Maybe that will wake us up. Last but not least on this issue is let's focus on outcomes as opposed to tech. What are the outcomes? I see too much focus on blockchain or artificial intelligence or stuff. Technology changes at the blink of an eye. The way I used to work 6 months ago and the way I work today because of artificial intelligence tools is night and day, right? So let's focus on outcomes as opposed to technology platforms. I'll stop there. Thank you.
Thanks, Ali. I always enjoy having, controversial panelists because it makes it more interesting. So thank you for being bold and saying what others might be a little bit more wary of saying. But I think I want to focus on the issues around communication and collaboration because the underlying thing between those two things is trust. And I think that's now where I want to kind of bring Eke in a little bit as well. And I'm glad that you also touched on PAPS. Eke, as the CEO and founder of Rise, the PAPS agreement between Rwanda and Ghana is actually meant to support you and enable, quick scaling for, companies like yourselves, as well as other fintechs that are trying to move to different markets. So I think 2 questions for you. What difference or what impact can PAPS and the new licensing passport that we're seeing actually have for your business so that other people can maybe potentially look into that? And then on the trust side, I wanted to find out a little bit about what have you learned in terms of building trust around financial products, especially amongst underserved and first-time investors. Again, I'm sure we have many first-time investors here or, people who are wanting to start their own businesses. So maybe you can give us some insights around that.
Awesome. Thank you very much for those questions. Ali, I appreciate the perspective that you gave. I think maybe because of from an operator standpoint, I don't even see the remarks as very controversial. I think they're very no-brainer, right? But I find that when you have a lot of no-brainer conversations, within certain contexts, people treat them like you're saying things that are so out of the box. But I'm glad that someone is saying these things because they're very necessary and very helpful for us. To address your question, I was recently the Central Bank of Nigeria um, directed Nigerian banks to start using the Pan-African Payments and Settlement Service for settling transactions, cross-border transactions. And a lot of us were very excited by that because it's one of the beginning steps of trying to make it easier for builders to collect payments, to settle transactions, and to be able to operate across the lines of multiple African countries from a single location. We're still at the very beginning stages of that. I'm glad you referenced the Continental Free Trade Agreement. We've seen more countries ratify that. Nigeria was one of the later countries to ratify that agreement. Again, even though we were pushing actively for those conversations or that for that to be ratified, the way I think about it is I like to use very simple examples because when you build startups, one of the things you learn is that no matter how cognitively complex an idea, you have to find a way to make it very simple and very easy to understand. Think about global trade. In an era before containers that we take for granted today, in an era before containers, depending on what you're shipping, depending on the country you're shipping from, depending on the type of vessel you're using, you have all different manners of ways of packaging goods across the world. And it made trade very unpredictable because you cannot standardize what you're shipping, the vessels, the transport time, the cost. Those things limited trade, even though they were things that are, I mean, they're not at the heart of trade. Trade is you know what you're buying, you know what you're paying for. But those are infrastructures that standardizes everything, which then makes it easier for people to participate across all chains. So now trade is huge. Every container port, every shipping line, every importer, every exporter, they know exactly what to expect. That's where trust comes from. In Africa, what we've found is that you have 54 countries with very little standardization. And so when you start building, if I wanted to build a product for the African market, I'm going to be building something that looks like a Frankenstein. If I'm going to comply with every regulatory environment across the continent, my products will feel like a Frankenstein because this place handles things it's very differently from the next door neighbor who handles it very differently from somewhere in another region, and so it becomes impossible. Excuse me, it becomes impossible. And so conversations like this, we are still very much at the beginning. We need way more of them, and we need them really, really fast if we are serious about growth in Africa. Think about another perspective. Yes, Africa is not a country, it's 54 countries. But the GDP of Africa at 2.4 trillion is about the GDP of a single state in the US. Texas, California, take your pick. But not only is it 54 countries, half of that GDP, about 1.4 billion or 1.4 trillion, is just 5 countries. The remaining half is the rest of the 40 something countries that make up the 48 countries or so, about 1.4 trillion, which means they're averaging 29 billion each versus the 280 billion on the 5 countries. So imagine having to comply with 48 different countries that have very little GDP contribution, and you're targeting a very small segment of each of those populations, but there's no simple way to be compliant across all those countries. We're limiting growth by designing that type of patchwork. So we are very much at the early stages of changing that, and we still see 10 years into the future for serious growth to start to kick in. On the side of trust, like I referenced before, trust is simple, even though it's not easy. It's simple, but it's not easy. Trust is, I know what I'm gonna get, and every time let's imagine a plane. Most of us remember the first time you ever got on a plane, unless maybe you were doing that as a kid. But the first time you got on a plane, there's this sense of, oh my God, you at the beginning, nobody is going to part with their money comfortably. There's always a bit of a, let's test the waters. And it's important for you to then make sure that what you promise the customer is what you deliver. And you do that over and over again over a really long time, and customers will learn to trust you. And then you keep working hard to make sure that you retain that trust. At a policy level, then I should be able to know or have a place to go to where I can understand the customer in Mombasa or the customer in Lagos or the customer in Accra. I verify their identity. I know that the things I'm seeing on my screen reflects the reality on ground, even if I'm not there. And I think at that level, Africa still has a lot of work to do. I'll stop here. Thank you.
Thank you so much, Eke. And also the analogy around Frankenstein, I think that's something that can stick quite clearly whenever we think about, the current situation and what actually needs to be fixed. But the way you're talking about the kind of patchwork system, I think this is a good time to introduce Sandra because, when you're at Tunes and now with Ecobank and you're dealing with cross-border payments and remittances, there's nothing as more patchy when it comes to trying to send money to different countries either from other continents into Africa or even between different countries within the continent. So maybe from that perspective, Sandra, what are the unique challenges and opportunities that you see, looking at the African fintech market in terms of these, specific verticals being cross-border payments and remittances compared to other global regions that you've worked with? What are we doing well? What do we need to do better? So maybe you can share some insights on that.
Thank you. When I think about Africa, I think about the possibilities. It's limitless. 1.2 billion people, speaking of 2,000 languages, 65% of people are below the age of 20. This is the future. And this is why we must invest in Africa. But as we look at investing in Africa, this is what I always tell the fintechs who come to talk to me. When you design your solutions, think beyond the borders of Africa. When these fintechs, startups sitting in the Silicon Valley, when they design their solutions, they don't only think about America. They think about how does my products and service go global. The first time when we used Uber or when Uber came, are you not scared getting into a stranger's car who are not even professional taxi drivers? But today, we all take Ubers, right? When I look at the Africa continent, unlike the unified and the more mature markets, we have a very diverse regulatory framework, currency fluctuation, and varying level of digital infrastructure. So this gives us unique and very nuanced market dynamics that you need a deep knowledge and understanding of each and every African market. I don't know how many of you have been to Niger, Chad, Central Africa. These are some of the toughest markets. Imagine the people sitting there, they're thinking about trade. How do I take my products to my neighboring country? Or how do I move the money that I need to do my import? Today, Africa, the cross-border remittance cost is still the highest. Some are as high as 20%. Would you believe that? Where in the mature market is as low as 3%. How do we move from 20% to 3%? Ali talked about the Africa Free Trade Area Agreement. Without money movement, the trade cannot happen, right? How do we make sure that we collaborate and build the infrastructure that is not just technology advanced, but also accessible and user-friendly that can address a broad spectrum of the market and the population? When we talk about, I don't know how many of you are using cryptocurrency. Can you imagine going to Navas and check out with Bitcoin? Or go to a restaurant and check out with Bitcoin? The technology is here and is coming very fast. What are we doing to quickly adjust and adapt to the new technology and the new and working with the regulators. I like when Ali say about the regulators and the conversation, the communication. I want to say that I think with what I'm seeing in the continent, 20 years, maybe not as long as you, some of our regulators are quite open, I would say open-minded. They are willing to have dialogue. A lot of the regulators have opened up with sandbox, working with the corporates to discuss innovation and invite them for dialogue. When we talk about digital currency, digital asset currency strategy, quite a number of regulators already started this conversation and inviting the corporates. So I think as corporates and as the fintechs and the startups, we have our own responsibility to make sure that we work with the regulators and make sure that we do not make them nervous by introducing risk into the system, right? We've seen in the growth of the fintech space, especially around investment in the last 5-10 years, you've seen the hyper growth to the decline, right? And now the market is at wait and see level. Why? Because a lot of startups have fallen within the span of 12 to 24 months, just because they probably did not have enough capacity building to understand how to run a long-term and sustainable business. So with our presence, I like when Angela says that they are 127 years old. Congratulations. If you multiple our number of countries we operate in 35 markets times 40 years, we are quite old. And as a group, right? I guess. As an organization, I think our fundamental belief and vision is to support the economic growth of Africans and African business. And we want to take you across border, but beyond just Africa. So when you come to us as we build our banking as a service platform, and a lot of fintech comes to us because of our presence in 35 markets, right? And I always tell them, when you come to us, have you thought of the oh my God, my English.
Practicality or
That-
practicality.
For that, English is hard sometimes, of long-term growth and sustainable growth. Are you just coming to us because of our name and you're looking for investment and take the money and leave? I think our group CEO recently made a remark. We have a lot of money within the boundaries of Africa, trillions of dollars. But if we don't invest in ourselves and we keep looking outside, asking them to come and support us, invest in us, then where do we look 5-10 years from now? So I would like to encourage collaboration, and let's think about the solutions. Not only we're going to truly address the needs of African market, but think global. Thank you.
Thanks, Sandra. So Angela, 127 years, getting to this milestone, I'm sure a lot of collaboration and a lot of partnerships has helped you get to this point and for you to be able to have made the impact that you have, not only in this country, but within the region as well. So I wanted to ask a little bit more about how do you see the partnerships, especially between banks and fintechs, evolving? Kenya has become a hub for a lot of fintechs, across the continent, amongst other cities, amongst other countries on the continent. So from your perspective, what does that collaboration look like? Because, on one side, some people think that, fintechs are going to consume the banking business and vice versa. So how does that look like from your perspective?
Thank you. There are three levels we approach how we work with the fintechs. So the first one is if a fintech is coming in and essentially what they're looking for is something as basic as payment trails. We'll provide payment trails even for the MNOs for M-Pesa. We've built APIs essentially to enable someone, because what you find with a lot of fintechs and businesses really is that their ability to scale is a challenge. So organizations like ours are built to scale. Now, there's a lot of assumption that people have that When in the digital space, you don't need the physical world. That is impossible. You cannot succeed without the offline world. So what we do is we look at it from end to end, O to O, whether you're going online to offline, offline to online, whichever it is. And we say, what are the critical elements the business needs in order to succeed? So if you need APIs to enable the payment rails, to enable financial reporting, to enable business management, then we've been building a lot of those AIs and then working with the fintechs depending on what they're able to do to supply that, to meet that, bridge that gap. So we find that some of them come for basic things like we want to be able to do collections. So we enable that. There are some who will come and they'll say we have great technology solutions, but we don't have the ability to scale. So now if it is proven, and of course we assess the technology and find that technology is strong enough to be able to be scaled, to be used to the customer bases we have, then we are able to onboard them for that purpose. I mean, recently we bought a fintech which we've been working with since around 2015. We bought majority stake in it. And the reason was because we wanted, we've used that platform in Kenya for the longest time. We needed to scale it and take it to the other 7 markets. Now, if we ask the fintech to do that, that is an impossibility. But we need to put the funds in so that it can be able to scale it and we can centralize the platforms, put in the necessary security and so on, inbuild the things that are necessary for it to be able to work for a financial institution. Like someone mentioned earlier, I think it was Ali who said, financial services are the most regulated arms of any business. So you cannot, you have to build it from the get-go. You have to build in all the security regulatory requirements from the beginning. Now, you can get the compliance sorted out. And like Sandra says, you can always sandbox and talk with the regulator. That opportunity does exist. There's no such thing as they are extremely rigid and will not move. Because even for them, they are learning. So what we do with them, a lot of the conversations we have, and it's true, it can be long and painful, like everyone points out, but you can walk the journey with them and be able to get to a good place. So the way we look at it is we take those 3 types of models. We say, what is the extent to which the bank can contribute? If the thing is great and it has customers that would be willing to use it, how do we come in? So we can, of course, be the ones to provide the security and trust for the money. So we'll offer the trust accounts and so forth and be able to support the organization to be able to scale. We work with everyone from the largest, the Safaricoms of this world, and put out lending products and savings products, to the very smallest, where the guy is just saying, I know I can digitize a little circle over here where we do tea factories. Okay, let's work on how we can get that. But the opportunities are vast. They are endless. In fact, what is missing most of the time when I'm looking for partnerships is who can we get to do some of those gaps we have? We bought a marketplace and then we were saying, okay, so we need to scale. We joined PAPS and we said, okay, how do we get the transactions flowing? We hear in Egypt, they need tea. They can't keep looking for dollars for them to be able to buy the cotton and the tea from here. How do we link all these people? They're rolling out an Africa Trade Gateway from Afri-Exim Bank, right? The problem they have is how quickly can they onboard? So the opportunities are not the challenge. It is whether or not the knowledge, the awareness, for people to get up and go. That's what's required. The opportunities for business are vast. Thank you.
Thank you so much for that. I want to actually just double click a little bit more and just find out, in terms of those partnerships and the digital channels that you just shared, how are you leveraging those to have, greater impact in terms of access to financial services for underserved populations? So women, young people, because you mentioned the tea aspect. When it comes to tea farmers, a lot of those tea farmers, you have like small women's groups who are actually contributing, and by you supporting them, you're also, encouraging and having a big impact in terms of financial inclusion. So if you could just maybe share a little bit about the impact of those partnerships, how you're leveraging that to have a greater impact for some underserved communities.
Yeah. So why I say that we work with all sides of fintechs, for instance, for that. So in Kenya, small groups, we call them chamas, isn't it? In other parts of the world, they call them credit unions and so on. So the point is that a lot of them, what they lack is the technology, especially mobile-based, to be able to track who the members are, what are the contributions, who is contributing, who is not paying their debt, who has been paid, therefore can we extend the credit line, Do they have enough money to extend the credit line? So what we've been doing is recruiting quite a number of them because we got a fintech partner who has built a solution that's specifically suited for them. Then what we do is we onboard them and then customize the solution for them. Because remember, at the end of the day, for the bank, the biggest benefit is to be able to onboard as many people as possible. And that's why financial inclusion is so important for us. And technology is the one that enables us to do that. You can't really do financial inclusion. That's why for 400 years, people just banked the cream of all societies only. Then technology enabled us to bank everyone. So our interest is then to work with fintechs to build those customized solutions for those verticals. So for you to be able to onboard, like for instance, the coffee value chain is very different from the potato one. True or false? The cycle is completely different. Or cabbages, horticulture, all of them differ. For us to be able to scale those solutions, we'll provide the credit lines, we'll provide the ability to move, but the fintechs have to build those solutions, then get organizations, banks and so forth to join and be able to provide now the other leg. So this is a critical collaboration. The only way we progress as a continent is if we start to stitch together all those gaps that exist. Like Eka says, if you're trying to talk about the different banks are open around, like she says, in 35 countries. Telcos are in 25 countries. The same telco is in all those markets. Then now we start to say, okay, so we'll buy the big platforms and then we'll enable in those markets for the lending and credit facilities for those markets. Then the fintechs in those markets must then build the customized solutions for the different verticals. I don't know if I'm being clear.
It's very key.
Okay.
Thank you. So as we're wrapping up the discussion and kind of looking now to kind of like the future outlook, I'm going to kind of gear the discussion towards expansion, in terms of scale, and then some of your insights in terms of what the next maybe 5-10 years are going to look like. So back to you, Esther. Just one last question. How is Safaricom actually thinking about those regional partnerships and expansion? Just to kind of, pick up from what Angela had shared, you guys are very strong partners. You collaborate on a lot of things that have a lot of impact across the board. So what does that look like for now in terms of moving forward?
So I'll look at it in two ways. We start with the very first one, a journey that we've started, which is how do we take the experiences that we've had in Kenya to other parts of the continent. And so through a joint venture, Safaricom and Vodacom, we created M-Pesa Africa. M-Pesa Africa, the mandate is to provide technology similar to that we have in Kenya across African markets. So today we're now present in 7 markets, Tanzania, Kenya, Ethiopia, Mozambique, DRC, Egypt, to then to deliver a proper ubiquitous mobile money solution in each of these markets. So through that partnership and through M-Pesa Africa, it means that we've got access to over 60 million customers for whom we can then now start to create solutions through. Talking then about how do we make this work in each of the markets, because there have been stories. It is true, M-Pesa, for example, landed in South Africa, and it didn't take off in the way that we thought it was going to take off. And so it's not just about having the technology, but it's having the relevant use cases in each of those markets to make it work. We have to be clear around what problem we're solving in each one of these markets. So let's take an example and look at Tanzania, which is one of the markets outside of Kenya that has been extremely successful. And I'll leverage on an example that Angela has used. One of the most successful products in Tanzania is what we call a chama product, right? They have a similar cultural way of saving and communing, and the ability for them to be able to save collectively, identify where the money has gone, distribute the money at the end of the year through this program becomes really important. So they call it chama. But they've also then lifted the same lending products that we have here in Kenya, and they call it Mkoba. Mkoba is, in their language, how you borrow. And they've been able to scale that. Let's go to DRC, which is another example that we can use where M-Pesa is strong. It's hugely a cash economy. and hugely very much dollar denominated. And so lifting exactly what we've done in Kenya will not necessarily serve them. So having a wallet that is dollar denominated, enabling trade across those different countries, then becomes across the different regions within the DRC, then becomes really important. So we have to leverage the cultural nuances, the cultural issues that we're looking to solve, and apply technology in the delivery of those solutions. We then need to think about what's the underlying infrastructure. It's not an accident that we have chosen to be in 7 countries, but we've chosen 7 countries where we've got a strong mobile money network through our partner and shareholder, Vodacom. And in that partnership, then we're able to leverage that existing technology, the relationships that we have there, in order for us to succeed. So it's also understanding what your competitive strengths would be, and then using that to then deliver what needs to be done. Then the other piece around expansion is, yes, we're using tech. All of us are connected through technology, but technology needs a form of physical engagement. If you don't have a strong agent network, if you don't have a strong banking partnership that enables you to do your distribution, it becomes really difficult. And so we are thinking very hard around who are our strategic partners. So if you think about East Africa, KCB is a natural partner for us. Then all the key East African markets. So how are we lifting all the solutions that we have across the markets, but customizing them to meet that specific market requirements? All right. We think about the agent network. For us to distribute airtime, you have to have people on the ground. How are we working with our agents, our dealers, in order for them to then enable our business to then move forward? That's the physical distribution. Then come to the user experience. If I have all these things, all the great networks, I've abided with all the regulations, as Ali has said, I have all the banking partnerships with KCB, if we choose to go with Ecobank, but then I have got a very difficult user experience. Would the customers actually want to work with us? So making sure that we've got a frictionless, simple, easy to use experience. Because again, when you think about access, it comes in simplicity. And there are also varying levels of education. And so making it as simple for those who have not gone to tertiary level of school, but those who have basic education, for them to be able to use your services, which is the true spirit of inclusion, then makes it a lot easier. So these are some of the things that we then need to expand. We then need to then think about collectively, how do we then start to shape and to influence regulation, right? Sandra talked about the sandboxes. I think it goes beyond sandboxes. It's also around understanding what the regulator's key objectives are and making sure that you're creating that environment that you enable you enable them to achieve the objectives, but also at the same time, we're able to then drive our solutions forward. So I'll give you an example. We're now in the space of investments. We launched ZD, our money market fund, which is we started to democratize money market funds. In the past, money market funds were only accessible from 1,000 shillings and above. Today, it happens even at 100 shillings. So it's enabling the distribution and making sure that things are easy and palatable, and addressing the bottom of the pyramid where people often forget that these particular customers need relevant solutions. It's going into the spaces of insurance where the penetration is very low. Across the sub-Saharan markets, penetration of insurance is less than 3%. How do we take this to the next level? How do we create relevant, innovative solutions that make it affordable for every single individual who's already been excluded? So these are some of the things that we think about when we think about expansion. And the last one in closing is how we think about diverse customer needs. There are those who are living with disabilities. We like to create for those who are similar to us. But there are those who have hearing, they're impaired from a hearing point of view, visually, differently abled. How do we also make sure that the experiences that we're creating make it all inclusive. And one of the biggest benefits that we've seen and why we focus on diversity is when financial inclusion started, majority of the people who were in financial services were men. Women have been the ones who have been most empowered, and I think it was a point you raised earlier. When you look at groups, it's the women groups that have exceeded where the men groups are. So it means that we're also bringing diversity by way of gender, we're bringing diversity by way of region, we're bringing diversity by way of different abilities, and we're making sure that the experience is something seamless that everyone can enjoy.
Thank you so much, Esther. I was actually in Kinshasa last year in one of the big informal markets. And just what you're talking about, the dollarization and how that's actually used, which is a completely different context to how we think about using dollars, which is normally when we go abroad and or we're making big purchases, across different markets. So thank you so much for that. I want to just bring Eke in quickly as we're looking to close. We've heard about expansion from the operator perspective. You recently acquired a company called Chaka. So from that perspective, maybe you can give some guidance and advice to other fintechs in the building in terms of how they could potentially look at acquisitions as a form of expansion, and that way, like increasing their strength and obviously their growth trajectory. So maybe you can speak to that, and then we'll have some just closing remarks from everybody else, just because we're running a little bit over time, if that's okay. Thanks.
Sure. And I'll make it quick. So the acquisition in 2023, we acquired Chaka, which is a digital broker in Nigeria, allowing people to invest in Nigerian stocks and US stocks. And then last year, we acquired Hisa, which is a company doing the exact same thing in Kenya. And for us, the rationale was simple. We understood that our customers, Rise has a managed portfolio approach, but we also knew that a lot of our customers wanted to trade on their own. So rather than start building a trading version of Rise, we just reached out to the people who were already doing that and said, hey, can we acquire? Or in Chaka's case, we reached out. In Hisa's case, I was friends with the founder, and after we closed Chaka, he reached out and said, hey, we can do something similar. And again, it made sense because they are doing the same thing in other countries. And we just thought we need to bring all of these efforts into a single umbrella rather than replicating. And I think the reason I want to highlight that is that some of the bigger players who in one aspect should be supporting the growth of the future technology in this space find it easier rather than pull or acquire or reach out and buy this technology. They would rather build one by themselves, or they would rather jump into the same fray as startups. But people misunderstand that startups and teams work differently. We solve technology differently. We solve user experience differently. Branding is different. And so even at our own little scale, we find that if there are ways to pull people together, let's do that so that the pie becomes bigger rather than each person try to doing the same thing in their own little corner. So that's the rationale. That's why we did the acquisition, and I think that's something we need to see more of. Thank you.
Thanks, Eke. So in terms of the closing remarks, I think we can start just Angela, Sandra, and Ali. You can share a little bit of insights. So we know that right now we are facing a lot of headwinds. There's a global trade war underway. Organizations like USAID have been dismantled, which a lot of technology companies, not only in Kenya but across the continent, had been relying on in some way or another in terms of funding. And now there's kind of a big gap. And we have a lot of founders. We have a lot of founders to be in attendance right now. So just in light of these headwinds, what advice would you give, the current tech founders, entrepreneurs to navigate what is going to be a very tough time and turbulent time moving forward, just so that they have a little bit of a positive end to this discussion? So Angela, you go first.
Thanks. Okay, my view is that turbulent times give you an opportunity to think out of the box so that you can come up with a different way to approach it. I was actually watching when they were announcing the tariffs, and I was in Asia. I was in Singapore, Malaysia, one of them, and they were showing all these containers at the port that were seated there because now these tariffs have been put in suddenly. What's the pricing going to be? Do you need to change the documentation? And there was a lot of uncertainty, and you could hear that coming across. And what I kept thinking is that, fine, so this means that people need to relook at the markets again, what you consider to be your core markets, what you consider to be where you should get your technology from. It sounds great now because I think the world order should change. That's my view. When I hear that Congo is dollarized, okay, yes, we're in DRC as well. And then I talk to my colleagues there and I listen to them. Or when I hear that, like I mentioned earlier, that the Egyptians want the tea or cotton from Kenya, but the problem is the dollars, and that's what we are using. And we must move actual dollars in order to be able to do this, and perhaps enables us to settle in local currency. That's the kind of thinking we need. We should not be focused purely on the old models where you wanted to ship to Nigeria, therefore you sent to Europe and then you sent it to Nigeria from here. Why are we still modeled like that? So I think there is a need for us to start thinking differently, and I think that was a kindness in my view. Thank you.
Awesome. I love that. Okay. Sandra, and then Ali, you'll go last.
The biggest challenge I see today in Africa is this access issue. So we need to collaborate. And I think I want to repeat this word: collaborate, collaborate, collaborate. This is the only way we can work together and join force to bring down the barriers of access. We talk about women banking, SME banking, agriculture banking. All this is because the barrier to access is too high, too expensive, too not accessible. So if we collaborate and we put the customer and our customer at the heart of everything that we do, we need to design solutions that are simpler, faster, and better. And one last thing, when we design solutions, these are for the fintechs. Think global, think beyond the borders of Africa. Because tomorrow, with this globalization, it's possible and very, very much possible that our solution will be serving a global needs. Thank you.
Thanks, Sandra. And yeah, Ali, if you could just give your last
Thanks.
remarks.
So for me, two key issues. The first is out with financial inclusion, in with economic inclusion. I mean, what exactly are we counting when people are not involved in economic, activity? I think thanks to brands like M-Pesa, I think we've hit our financial inclusion discussions. Let's move forward and now start focusing on economic empowerment. This is super crucial for a continent that its leaders always keep on talking about our youth dividend. And I'm like, what dividend? What have you worked for to earn that dividend? Do we understand what dividend means? We have a youth bulge, not youth dividend. That's why our youth are dying across the Mediterranean trying to go to Europe, and Europeans themselves are trying to run away from Europe. What's wrong with us? Okay, so economic empowerment is crucial. In relation to tariffs and Trump, look, I'm sorry, with all due respect to any of my American friends in this room, America is a waning power. It's on its last legs. We are moving forward. We are working with African countries. We have POPs that is starting to work. I'll give you a personal example. A couple of days ago, I had to send money to Ghana to a friend of mine. And for those of you who listen to Kiss FM, I'll just say as a Kenyan, let me tell you, Maina. It was simple. 3 minutes, the guy had his money on his MTN wallet. I used a Remittance player, completely integrated with M-Pesa, showed me how much of my shillings will be transferred into Ghanaian cedis, and voila, it was done. So, these conversations, you must have dollar, those are 1980 conversations. For those people who know, they've moved on. The PAP's continental exchange platform is live. You can go on to that exchange platform and transact African currency. So, guys, don't worry about tariffs and stuff like that. We've moved on. Let's focus on the right policies and empowering our African people. Thank you.
Thanks, Ali. So if you actually want to hear a little bit more about Ali's insights, he actually has a podcast, Ali Talks Tech, and that covers the whole continent and, from acquisitions to policies. It's something that, if you're potentially interested in, you can always reach out. I know we're running a little bit over time, but we've had such a great discussion, I think, a lot of insights, a lot of real talk, which I think a lot of the people here really appreciate, especially hearing from people who are doing and have actually started a lot of the fintech initiatives that are driving, everything else for everyone. So yeah, maybe we can take 2-3 questions at most. And then if not, you can definitely try to reach out to any of the panelists while they're here during networking or over lunch for that. So maybe 3 questions and then we can close. Okay, the gentleman over on my right in the blue suit was very fast. You have to be very quick, guys, quick fire. I don't know who has a microphone to share. Thanks. And then gentleman in the white hoodie. And the gentleman in the black shirt, I think, with the orange label. Thank you.
Good morning. My name is Kega. I'm the managing partner at my own firm, as well as the head of legal at a crypto company called Swiped. So recently there have been favorable developments in the world of crypto and blockchain. The first is that there's a virtual asset service provider bill that's coming out possibly in August, as well as a development that has happened today, the scrapping of the 3% tax that had been established before to 1.5%. Given these changes and the positions that you hold, is there a defined strategy that you have regarding crypto, especially given the developments that we now have? That would be my first question. And then secondly, in terms of adoption with fintechs that are essentially developing in crypto and blockchain, what would be a good recommendation in terms of the best practices that you would imagine would essentially be at play in terms of the collaboration that we've been talking about? Those are my 2 questions. Thank you.
Thanks. I think we'll take all the questions and then we can respond thereafter. So the gentleman in the white hoodie. I think, okay, Ali, if you're good to take that, those batch of questions.
Hello, my name is Bivon from Element Pay, a new startup whereby I release stablecoins. My main question is about what do you think of stablecoins in Africa and the rise of stablecoins whereby people are able to transact globally? So since, for example, in the last year in Kenya, they had 10% of the people of the global transactions who carry stablecoins global in Kenya only. So what do you think of stablecoins and the regulations around it, since they're rising the rise of blockchain using the SACO, USDC, and USDC? Yeah.
Thank you. Sandra, I know you'd mentioned using stablecoins for payments, so maybe you can take that. And then the gentleman here in the black t-shirt at the front.
Thank you. My name is Gaza Matawole. I'm from Orange Money, Botswana. Thanks to all the panelists for that very insightful presentation. Very touching, considering the problems that you are talking. Some of them we don't have solutions. We've been talking about solutions for some time now, and it doesn't seem like we will get there. But yes, there is always hope. There is always hope. I want to talk about what Ali and Ike mentioned earlier around the creating and enabling a regulatory framework. I felt such, if I may say, when Ike mentioned an example that if you come up with a solution, you go to Nigeria, implement, launch. 2 years later, you want to scale up, move to Botswana. You have to redevelop something again because the regulatory framework there is quite different. You try to go to Morocco, different thing. I wanted to know from Eke, In fact, I just sent a communication to the chairman of the Botswana Fintech Association to ask him if he knows you. I understand you guys have been working together for some time now. I wanted to know if you guys are collaborating to come up with, try and convince the regulators from the specific countries to try and come up with that enabling regulatory framework. If you have started something, how far are you? Should we have hope that very soon we'll have that interoperability, if I may say, amongst the fintechs being able to scale up and move to different countries with ease? Thank you.
Thanks, guys. So I think, if we can just get some quick responses to those, and then if there's any other further discussion, can have it after the part.
So, sorry, I want that gentleman to repeat his question. He wasn't very audible. Okay, was it strategy around crypto?
The first question was regarding, that seemed a bit loud. The first question was regarding whether the participants on the panel, especially the organizations that they represent, have they begun having a concerted effort towards a crypto strategy internally? One, and secondly, was in terms of collaborative efforts with establishments such as yourself, looking at stable coins, looking at decentralized finance. In your opinion, so far, how does that look like? That's the question.
Okay, so first, let me just say that I can't speak for the organizations that are represented in this room today, but I can say that if they are not having those conversations, then they need to start having those conversations. But having said that, let me go back to the fintech, right? Those conversations you can have, but you have jurisdictions that are already have policy and regulations around fintech. There are very few countries in Africa that already have those set. You have Nigeria, you have South Africa. In my humble opinion, South Africa is probably the most progressive when it comes to crypto. And then you have Botswana. So everybody in financial services, even the largest bank in the world today, JP Morgan, well, not necessarily the largest, because I think there are two Chinese banks that are larger than JP Morgan, although you'll never hear that in the Western press. But the most visible, so let me just say, the most visible global bank today is JP Morgan. So Jamie Dimon, the group CEO, talks crap about crypto. But his traders behind him are the largest traders of crypto. What you want to take with that information out of this room is up to you. So that's one. Secondly, to speaking around stable coins. Guys, look, fact, you can take to the bank, no pun intended. Today, in Africa and globally, stable coins are highly used for various use cases, for remittances, for currency exchange, treasury, and all that. So if we're talking about how crypto is being used, that cut is already out of the bag. It's done. It's dusted. Policymakers and regulators are scrambling to catch up. Thank you.
Thanks. Maybe Eke and Sandra, you can just answer the other questions and then we can wrap up. Thank you.
Yeah, I believe your question was around how we are creating that shared framework for interoperability and if we're doing any work in that regard. I can tell you for free that I have just started that conversation. And the reason is that for the last 5 years, I was just focused on building, right? And it's only now that we've gotten to this stage as a company where I can start to think beyond just the immediate needs of my company and my team and to consider the wider landscape. We're just at that beginning. However, the conversations have started. I met with someone here doing some work on the free trade, African Continental Free Trade Act, to talk about how we can start to harmonize what's happening in Kenya and what's happening in Nigeria. Like I said, I was excited that we just connected because I'm also looking to have conversations with him in that regard. But I'm talking about it from a place of a need that I myself have recognized, and also from the understanding that Africa being a young continent, you see, the thing with founders and founders in the room, you know this, we're going to find a way to build or solve the problems in front of us. That's just a fact. Some of it might mean that those compromises would create risks for our business, but we'll deal with them later, because in the moment we're trying to move forward. So this is me then saying to regulators and to governments that Africa being a young continent full of people trying to build solutions, if we don't remove the obstacles in the way, you're going to see a lot of tributaries running around those obstacles. But what you want is a big river. So please focus on dredging and clearing the way while we focus on building. I'm not a politician. I don't have the patience for policy work, but I'm starting to realize that I must learn to work with the people who are good at that so that they can help us clear the road and I can focus on building, which is what I love. Thank you.
Thanks. I think you're sat right next to the right person for that.
To answer the question, as Ecobank, yes, we are. I'm leading actually that conversation. Last month, I attended the South Africa Crypto Assets Conference, organized by the regulator, by the way. They have 250 regulated and licensed crypto asset service provider. So I highly encourage our regulators from the other countries, please start the work, if not already begun. On my side, if I look at how, and again, we should always be careful and be cautious, how cryptocurrency started, the intention to what it is being used today are very different. So in Africa, because of our very unique challenges of the currency fluctuation and lack of enough liquidity in the market. So that's why we have a major need to leverage this digital currency. So every organization in the space should already start if they haven't begun, because the first and the most area will be disrupted is cross-border remittance and payments. So I'm working on that. Thank you.
Thank you so much. And thank you so much, guys, for your patience. Thank you. A big round of applause to all of our panelists here for a very insightful conversation. In terms of the takeaways, think outside of the box. Stable coins are already here. So if you're not at the table, you need to be, or you're going to be, you're the ones being eaten. And that we should definitely be looking forward to more collaboration, partnerships being the key to unlocking the unlimited opportunities that can be found on the continent. So thank you so much, guys. Another big round of applause for our fintech gurus and for them taking the time out of their very busy days for this discussion. Thank you so much.